All right, let's dive into Ashiana Housing Limited's Q2 FY25 performance. We've got a lot to unpack today. Starting with their official financials, we're talking assets, liabilities, cash flows, the whole nine yards. Plus, we've got an independent auditor's review and a really, really impressive investor presentation. So by the end of this deep dive, you'll have a clear picture of how Ashiana Housing is performing, what's driving the results, and what it all means for their future.
I'm really excited to dig into this. The real estate sector is always so fascinating,
Yep.
especially in today's market.
Absolutely. And right off the bat, we have some pretty interesting headline figures to unpack. Ashiana Housing reported a net loss of Rs 7.55 crores in Q2, but they also posted a pre-tax operating cash flow of Rs 78.18 crores. Now that seems a little counterintuitive, doesn't it? How can a company with a net loss have positive cash flow?
Yeah, that's a great question. And it really highlights the importance of understanding the nuances of real estate accounting. You see, Ashiana's Q2 was a bit light on deliveries, and this directly impacts how they can recognize their revenue. So think about it this way. They've made sales in previous quarters, they have the cash in hand, but the revenue isn't officially booked until those homes are delivered. And in the first half of FY25, they only delivered one new phase. Shibum.
This is like money in the bank, but not on the books yet. I was starting to see why cash flow is such a vital metric, maybe even more so than just profit or loss in isolation.
Exactly. Cash flow gives you a much clearer picture of the actual money coming in and going out. Now, while that net loss might initially raise some eyebrows, if we dig into their operational data, we start to see a much more optimistic story emerging. For instance, their area booked surged by an incredible 286% compared to the previous quarter.
286%. Wow, that's huge. What's driving that kind of growth?
Well, the launch of Amara Phase 4 in Gurugram seems to be the primary catalyst.
Uh-huh.
Almost 60% of that phase was sold on launch day. So clearly there's strong demand for what they're offering.
Yeah, that's really impressive. And it definitely makes you wonder, what is it about Ashiana's offerings that are resonating so strongly with buyers in this market? Is it the pricing,
That.
location,
Mm-hmm.
amenities, or some combination of all of these
Yeah.
factors is definitely something to think about. Now, they're clearly not just sitting on those sales either. They've also ramped up construction activity, which I think signals a commitment to completing these projects and ultimately recognizing that revenue down the line.
They are, and it's really interesting to see how they're positioning themselves within the broader market. Ashiana received a positive credit rating from ICRA, reaffirmed at ICRA a stable, and that's a really good indicator of their financial stability.
Yeah, it definitely adds a layer of confidence,
Right.
especially for potential investors.
Absolutely. And to stay competitive, they're employing several key strategies. First, they handle all construction in-house, which allows them to keep tight control over costs and quality. Second, they've built a really strong internal sales and marketing team. This helps them cultivate direct relationships with customers. And finally, they really emphasize customer satisfaction, and it shows. Their referral rates are through the roof. Word-of-mouth marketing is incredibly powerful, especially in the real estate world.
That's a trifecta of really smart moves. Building that kind of trust and reputation, well, that's gold. And this brings up an interesting question for our listeners. In today's incredibly competitive real estate market, do you think these strategies are enough to give Ashiana a real advantage? Take a moment to consider that while we shift gears a bit and explore what Ashiana has said about their outlook for the rest of FY25.
Despite the Q2 loss, they seem quite confident about achieving earns 2,000 crores in pre-sales for FY25. Now that's a bold target, especially considering some of the current economic headwinds.
It is, but I think it also suggests a real belief in their ability to execute and navigate those challenges.
So with that in mind, what are some of the potential risks or obstacles they could face in hitting that target?
Well, rising interest rates and inflation are major concerns for any real estate company. They can dampen consumer demand, and Ashiana is not immune to that. Also, they're very reliant on seamless project execution. Any delays or hiccups could really impact their revenue projections.
Right, so a lot hinges on their ability to manage costs,
So,
timelines, and those external factors that are largely out of their control. But on a more positive note, that their land bank is robust, and they've got a pipeline of really diverse projects in the works, right?
absolutely. They're looking at expansion in Bhiwadi, Gurugram, Jaipur, Chennai, Nibrana, and Pune. And the types of projects they're developing are quite interesting. Senior living, premium homes, and of course those kid-centric homes that we talked about earlier. It's like they're building these entire mini ecosystems
Mm-hmm.
rather than just housing units. That kid-centric concept is fascinating. It really speaks to a deep understanding of their target market. and catering to their very specific needs.
It does, and it raises an interesting question for our listeners. Do you think this focus on these very niche markets is a viable long-term strategy in the world of real estate? Is it a passing fad? Or a sign of things to come? Something to ponder as we move forward. So for now, let's unpack some of those future projects and see how they fit into Ashiana's overall growth plan.
Okay, let's do it. Let's start with their plans in Biwadi. They've got this massive plot of land there,
They
right?
do. It's called Millikpur. It spans over 40 acres. And they're envisioning a mix of premium homes and senior living, really targeting two distinct but growing segments of the market.
So they're hedging their bets a bit, offering something for different demographics. Smart move.
Hmm.
Now on to Gurugram, where they have Ashiana Aroham in the pipeline.
Yes, Araham. All about those kid-centric homes. It's situated on 10.8 acres of HIIDC land in Sector 80. It seems like they're really doubling down on this concept, recognizing the demand for family-friendly housing in a city like Gurugram.
Makes sense. Gurugram is a hub for young families with good schools and a vibrant lifestyle.
So,
All right, next on our list is Jaipur, where Ashiana recently acquired land in Jaisbura.
right, this new plot is around 11 acres, and it presents a really good opportunity for them to expand their footprint in Jaipur. It's interesting to see how they're building on their existing success in the city. They already have a presence with projects like Umang, Amantran, and Akonch.
It's like they're building a brand ecosystem within specific cities. So what's the game plan for this new land in Jaipur?
Well, it seems they're sticking with what works, a mix of premium homes and, you guessed it, more kid-centric homes.
Makes sense. If it ain't broke, don't fix it. All right, let's shift gears a bit and head over to Jamshedpur.
In Jamshedpur, they've acquired a smaller plot of land, almost 4 acres in Muza Harkand. While the scale might be smaller, it still gives them a chance to tap into that Jamshedpur market, where they've already seen success with projects like Prakriti and Sehar.
So it seems like a strategic expansion, solidifying their presence in a market they already understand, sticking with their successful formula. What types of homes are they planning for Jamshedpur?
Well, you probably already know the answer. A mix of premium homes and Imperia.
Yep.
Kid-centric homes. It really showcases the versatility of that kid-centric concept, appealing to a wide range of buyers across diverse locations.
It's interesting how they're weaving that concept into different markets, okay? Now, let's not forget about their completed projects, where they still have unsold inventory. Those represent a pretty good chunk of potential revenue.
Absolutely. Think of it as ready-made product just waiting for the right buyers. Ashiana has 2.56 lakh square feet of unbooked area across various completed projects, including locations like Biwadi, Gujarat, Jodhpur, Jaipur, Jamshedpur, and Pune. So that represents a significant opportunity to boost their revenue in the short term.
It's a good safety net,
Yeah.
especially while they're waiting for those new projects to come online.
Yeah.
Okay, so we've covered Biwadi, Gurugram, Jaipur, and Jamshedpur. What's next on the agenda?
Let's head down south to Chennai, where Ashiana has big plans for their Vatsalya project.
Nathalia? Okay, tell me more. What's the scope of this project?
Well, they're looking at a pretty sizable expansion, encompassing phases 2, 3, 4, and 5, with a total saleable area of over 10 lakh square feet. It's a major commitment to the Chennai market, and this time they're focusing on senior living.
Makes sense. Chennai has a pretty sizable retiree population, and Ashiana has a strong track record in that senior living space. Now, while we're in Chennai, there's another intriguing project, Ashiana Swarang.
Right. Swarang is a joint venture project with Aryan Foundations. They each hold a 50% economic interest in the project.
A joint venture. Interesting. What's the scale of Swarang, and what are they planning to develop?
Well, Swarang is quite a large undertaking, spanning phases 1, 2, and 3, with a combined saleable area of 5.55 lakh square feet. They're going to be focusing on premium homes with this project.
So they're targeting different segments within Chennai. Senior living with Vatsalya, premium homes with Sarang. Seems like a smart strategy, diversifying their portfolio within a single city.
Absolutely. They're casting a wider net, appealing to a broader range of buyers, especially in a city like Chennai. With such a dynamic real estate landscape, I think this multi-pronged approach could really be a key to their success there.
All right, let's journey back north. This time to Neemrana, where Ashiana is planning to expand their Angan project.
Phase 2 of Angan Nimrana is on the horizon, with a planned saleable area of 4.37 lakh square feet. And they're sticking with their focus on premium homes in Neemrana. It's a location that has seen growing interest from buyers, seeking a good blend of affordability and connectivity.
So it seems they've found their niche in Neemrana, and they're capitalizing on those specific demands. Now let's head over to Pune, where they have 2 projects in the works, Amod and Utsavlavasa.
Right. with a mode. They're planning phases 2 and 3, with a combined saleable area of 5.53 lakh square feet. And once again, they're going with senior living, recognizing the substantial retiree population in and around Pune.
Pune has always been a popular destination for retirees, so it makes sense for Ashiana to leverage their expertise in senior living there. What about Utsav?
For Utsav Lavasa, they're looking at phase 5, a smaller expansion with a saleable area of 0.84 lakh square feet, and they're ready to launch phase 5 soon. They received the completion certificate for phase 4 back in July.
Okay, so they're hitting the ground running with Utsav. And, as expected, sticking with their proven senior living model. It's really interesting to see how Ashiana Housing is strategically expanding across these various locations, catering to both existing and emerging markets.
It is. And they're not just expanding geographically, they're also diversifying their offerings with a mix of those premium homes, senior living, and of course those increasingly popular kid-centric homes. I think it suggests a strong commitment to long-term growth.
Absolutely. But, as we've discussed, there are always challenges to overcome in a dynamic industry like real estate. So before we wrap up this part of our deep dive, let's take a quick look at Ashiana Housing's shareholding pattern. This gives us a little peek behind the curtain to see who owns the company and who has a say in its direction.
Good idea. As of September 30, 2024, the promoter and promoter group held a majority stake in Ashiana Housing, controlling 61.11% of the company.
So the founders and their affiliates still hold a significant amount of power. How about other major shareholders?
Well, among the institutional investors, India Capital Fund Limited holds a pretty sizable chunk of shares, accounting for 6.54% of the company. SBI Contra Fund is another big player, with 7.53%, and the Investor Education and Protection Fund Authority, which falls under the Ministry of Corporate Affairs, holds 3.44%.
So it's a mix of investment funds and government entities, all with a stake in Ashiana Housing's success. It's a reminder that the company's performance is being closely watched by a pretty diverse group of stakeholders.
Absolutely. These investors, along with the broader market, will definitely be watching Ashiana Housing's progress in the coming quarters. Their ability to execute those expansion plans and navigate all the complexities of the real estate market will be key to their continued success,
Before we move on, I think it's worth emphasizing a point we touched on earlier.
Yeah.
Ashiana Housing's dedication, customer satisfaction, and relationship building, Their high referral rates speak volumes. In a market as competitive as real estate, where trust and reputation are paramount, this customer-centric approach could be a significant differentiator for them in the long run. I completely agree. It's one thing to have those innovative products and ambitious expansion plans, but it's another thing altogether to cultivate a truly loyal customer base. Ashiana seems to be doing both.
They do. And it really points to a sustainable approach to growth, one built on a foundation of trust and positive customer experiences.
All right, so we've explored Ashiana Housing's financial performance, their operational highlights, expansion plans, and even their ownership structure. Now it's time to connect the dots and distill some key takeaways from all of this information.
I think one key takeaway that really jumps out is that while they did post a loss in Q2, there are some really strong signs of operational momentum and genuine demand for what they're building, their expansion strategy. Coupled with that focus on those niche markets, senior living and kid-centric homes, I think that could really be a recipe for long-term success.
It's a fascinating case study. A company navigating a pretty volatile market with some real innovation and a genuine focus on the customer. But it also raises a question for our listeners. In the big picture, will this laser focus on specific housing concepts? Will that be the key to their sustained growth? It's something to think about as you continue to explore Ashiana's story.
And remember, the real estate market is constantly evolving, so staying informed and curious is key.
Now you might be wondering, how are they funding all of these ambitious projects and expansions? Where's the money coming from?
Well, that's where their financial strategy comes in. They've primarily relied on internal accruals, basically their own profits, and debt financing. It's a pretty standard approach for real estate developers.
So a blend of their own money and borrowed money. Makes sense. But whenever you talk about debt, it's natural to wonder about the level of risk involved. Are they taking on too much?
That's a very important question. And it's crucial to assess their debt levels, especially with interest rates being as high as they are right now. A key metric to look at here is their debt-to-equity ratio. Think of it as a measure of how much debt they're using compared to their own equity. As of September 30, 2024, their consolidated debt-to-equity ratio was 0.35.
Okay, so 0.35. Now, for those of us who aren't financial wizards, what does that number actually tell us? Is that good, bad. What does it mean for their overall financial health?
Well, the debt-to-equity ratio of 0.35 is generally considered to be pretty healthy, especially for a real estate company. It suggests they're not overly reliant on borrowing, and they have a good balance between debt and equity financing. I think for potential investors, it's definitely a positive signal. It means the company isn't overly burdened by debt and has more flexibility to invest in future growth.
That makes sense. So they're not drowning in debt. But what about their ability to actually generate profits? Can they make enough money to
Yeah.
justify these investments and pay back their debts?
Well, that's the million-dollar question, isn't it? While they did report a loss in Q2, their past performance and their projections for the future suggest that they do have the potential to generate some pretty strong returns. For example, in FY24, they achieved a net profit margin of 8.63%. That's pretty impressive. And if they hit their pre-sales target of Rs 2,000 crores for FY25, we could be talking about some serious revenue growth.
Okay, so the potential is definitely there, but it's not a sure thing. They'll need to execute their plans flawlessly and navigate the market really carefully.
Speaking of the market, what are some of the broader trends shaping the real estate industry right now? And how are those trends influencing Ashiana's strategy?
Well, one of the most significant trends is urbanization. More and more people are moving to cities for better opportunities,
Right.
which means the demand for housing, especially in Tier 1 and Tier 2 cities, is constantly increasing. And that's precisely where Ashiana is focusing their expansion efforts.
Right, so they're going where the growth is. They're strategically aligning themselves with those demographic shifts. Are there any other major trends shaping the market? Another really important factor is the changing demographics of India. We have a growing middle class with more disposable income, leading to increased demand for quality housing. And as the population ages, the demand for senior living communities is rising as well.
So it seems like Ashiana's focus on those premium homes and senior living is perfectly in sync with those societal shifts. They're really catering to the evolving needs of a changing India.
Absolutely. They're not just reacting to the market, they're anticipating future demand and positioning themselves to capitalize on it. And let's not forget about the role of technology in all of this. Online property portals, virtual tours, digital marketing, they're transforming how people search for and buy homes.
Yeah, it's the digital age, even in real estate. So how is Ashiana adapting to these technological advancements? Are they embracing the digital wave or clinging to those old school methods?
Well, they seem to be embracing the digital world quite effectively. They've adopted those digital marketing strategies. To reach a wider audience, their website is really user-friendly and provides a ton of information about their projects. And they're active on those social media platforms, engaging with potential customers and really building their brand.
So they're not stuck in the past. That's good news. Now let's circle back to their financials for a moment. We've discussed profitability, but how's their cash flow looking?
Their cash flow is actually quite healthy. Remember, they achieved a pre-tax operating cash flow of Rs 78.18 crores in Q2. Despite that net loss, this positive cash flow is really a result of their strong sales and their efficient collection processes.
Okay, so the money's coming in, even if it's not all reflected in their profits yet. That's reassuring. But cash flow is just one piece of the puzzle. What about their balance sheet? What does their statement of assets and liabilities reveal about their overall financial health?
Well, their balance sheet paints a picture of a pretty solid financial foundation. As of September 30, 2024, their consolidated total assets were Rs 298.74 crores, while their total liabilities were Rs 222.04 crores. So this means they have a healthy asset base, and their debt seems manageable.
Okay, so they have more assets than liabilities, which is always a good sign.
Mhm.
But what about the specific makeup of those assets? What are their major assets? And how easily can they convert those assets into cash if they needed to?
Well, their biggest asset is their inventory of unsold units, which is valued at Rs 200.08 crores. Now, this makes up a large chunk of their assets, and it reflects their ongoing construction projects. They also have substantial investments in subsidiaries and joint ventures, totaling Rs 10.24 crores, and they have Rs 13.57 crores in cash and cash equivalents.
Okay, so they have a mix of assets, some that are a bit harder to convert into cash quickly, like that inventory, and assets that are more liquid, like the cash and the investments. This balance gives them the resources to fund their current operations, but also have some flexibility. Now let's talk about those liabilities. What are their major liabilities, and how are they managing them?
Their largest liability is actually advances from customers, which total Rs 177.101 crores. This represents the money they've received from buyers for homes that are still under construction They also have borrowings of Rs 26.69 crores, mostly from banks and financial institutions, and lease liabilities of Rs 574 lakhs.
So a big chunk of their liabilities is tied to their core business, selling homes. That's pretty typical for real estate developers. But how can we be sure that they can actually meet these financial obligations as they come due?
Well, their positive cash flow and their strong sales performance are key here. These factors give them the resources they need to service those debts and repay those customer advances. As they finish those projects, they're also strategic about managing the timing of their debt repayments to avoid any cash crunches.
So they're not just taking on debt blindly. They have a plan for managing it responsibly. Now, behind every successful company, there's a strong management team. So who's steering the ship at Ashiana Housing, and what's their track record?
Well, Ashiana is led by a team of seasoned professionals with a ton of experience in the real estate industry. Mr. Ankur Gupta, the joint managing director, he has played a pivotal role in their growth and expansion, and they have a really solid board of directors with diverse expertise, providing guidance and oversight.
Okay, so it's not just a one-man show. It's a team effort. That's reassuring. Let's move on to their brand and reputation. What are they known for in the market, and how does that impact their business?
They've built a really strong reputation for quality construction, timely delivery, and customer satisfaction. I think their focus on niche markets like senior living and kid-centric homes has really earned them recognition as an innovative developer, and this positive brand image helps them attract buyers and maintain those premium prices.
It's like a seal of approval. It gives buyers confidence that they're making a smart investment. Now, something that I find really impressive about Ashiana is their commitment to social responsibility.
Oh, absolutely. Their corporate social responsibility initiatives are definitely noteworthy. They've been actively involved in supporting education in Rajasthan, which has earned them several Bhamasha awards, including the prestigious Shiksha Bhushan title.
So they're not just about making profits. They're giving back to the community. That's commendable. Now, we've talked a lot about their strengths, but let's not shy away from the potential challenges. Competition in the real estate industry is fierce. So how is Ashiana positioned to withstand the pressure from all those other players?
You're absolutely right. The real estate market is incredibly competitive. But Ashiana does have a few things working in their favor. I think their focus on those niche markets gives them a distinct advantage.
Yeah, it's about carving out that unique space for themselves rather than trying to be everything to everyone.
Exactly. They've identified those specific customer segments, and they've really tailored their offerings accordingly, this focused approach. Combined with their strong brand reputation and their customer centricity, it positions them well to compete effectively.
Okay, so they have a deliberate strategy, but let's be realistic. Competition is intense, especially in a market like India. New players are popping up all the time. So how is Ashiana staying ahead of the curve?
Well, they seem to be very aware of the competitive landscape, and they're taking proactive steps to maintain that edge. They're constantly innovating, they're expanding into new markets, and refining their products to meet those changing customer needs.
So they're not resting on their laurels. They're constantly adapting and evolving. Now let's take a closer look at a key aspect of their business model, their sales and marketing approach.
One notable aspect of their approach is their reliance on an in-house sales and marketing team. Rather than outsourcing to those external brokers, this gives them much more control over the entire sales process, ensuring consistent messaging and stronger customer relationships.
Yeah, it's like they're owning the customer experience from start to finish.
Precisely. And it seems to be paying off. Their conversion rates are high, the customer feedback is positive. It suggests that their in-house team is doing a great job communicating their value proposition, addressing any customer concerns.
So they're not just throwing money at random marketing campaigns. They're strategically managing that entire sales journey. And another thing that I found really interesting is their emphasis on customer referrals.
Yes. Referrals are like gold in the real estate world. People trust recommendations from friends and family more than any fancy advertisement. Ashiana's high referral rates, well, they speak volumes about their customer satisfaction levels.
It's like a vote of confidence.
Yeah.
From their existing customers, they're so happy with their experience that they're telling their friends and family to buy from Ashiana.
Exactly. And this type of organic growth through those referrals is much more sustainable and cost-effective than relying solely on those traditional marketing methods.
It's a win-win. Now, looking ahead, what are some of the key factors that will determine Ashiana's success in the coming years?
Well, several factors will play a crucial role in their future. I think the overall health of the real estate market is definitely paramount. If demand remains strong and property prices continue to rise, Ashiana will be really well positioned to benefit.
Okay, so they're somewhat at the mercy of the market, but they also have some control over their own destiny. What other factors are critical for their success?
Well, their ability to execute their projects efficiently, on time and within budget, that's absolutely essential. Delays or cost overruns can really eat into their profits and hurt their reputation.
In a capital-intensive industry like real estate, operational efficiency is absolutely key.
Hmm.
Any hiccups in project execution
Yeah.
can have a real ripple effect.
Absolutely. They also need to manage their debt levels carefully as those interest rates rise. Keeping their debt under control will be crucial for maintaining that financial stability.
It's a balancing act between pursuing growth and maintaining financial discipline. Now, here's a factor that's gaining increasing importance: sustainability.
You're right. Sustainability is no longer just a buzzword. It's a major consideration for both consumers and investors. And Ashiana seems to be on board with this shift. They've incorporated sustainable practices in their projects, like those energy-efficient designs and water conservation measures.
So they're building green
Right.
and saving green at the same time. What other ESG initiatives are they implementing?
Well, they've also implemented water conservation measures, like rainwater harvesting and wastewater treatment, to minimize their impact on water resources. And they're actively involved in those social initiatives, particularly in the area education. We talked about their support for schools in Rajasthan.
So they're not just focused on profits, they're making a positive social impact. Now, before we wrap up this part of our deep dive, let's take a closer look at that kid-centric homes concept. It seems to be a key differentiator for them. And I'm curious to know what makes it so unique.
Well, their kid-centric homes go beyond just providing those spacious
Right.
apartments. They actually create entire communities
Yeah.
that are designed to support children's growth and development. Think dedicated play areas, sports facilities, activity centers, even educational programs.
So it's not just about the physical space, it's about creating an enriching environment
Right.
where kids can really thrive.
Exactly. They're tapping into a genuine need for families who want more than just four walls and a roof. They're offering a lifestyle that caters to the needs of families with the children.
It's a smart move, particularly in a country like India, where family is so important. But while this concept is clearly resonating with buyers, are there any potential downsides or challenges that they might face with this approach?
Well, one challenge could be scaling this concept effectively. Can they maintain that same level of quality and attention to detail as they expand into new markets and build larger projects? It's always harder to scale while preserving those unique elements that make the concept so appealing in the first place.
Yeah, that's a valid concern. It's easy to lose sight of the details when you're growing quickly.
Another risk is the potential for oversaturation. If too many developers jump on that kid-centric bandwagon, it could dilute the uniqueness of Ashiana's offering.
Right, so they need to stay ahead of the curve and keep innovating to maintain their edge. Okay, let's shift gears a bit. Let's talk about those senior living projects. What sets their senior living communities apart?
Well, their senior living communities are all about providing a comfortable, secure, and engaging lifestyle for seniors. They offer a range of amenities, like healthcare facilities, social activities, and accessibility features designed specifically for the needs of older adults.
So it's about creating a supportive and enriching environment where
Yeah.
seniors can thrive.
Exactly. They're responding to the growing demand for those senior-friendly housing options, especially as India's population ages, and more people seek those comfortable and secure living arrangements for their parents or even for themselves.
It's a demographic shift with huge implications
Mhm.
for the real estate industry. Now, while Ashiana has a good track record in developing those senior living communities, what are some of the challenges they might face in this segment?
Well, one challenge is definitely managing those healthcare costs. Providing on-site healthcare can be expensive, so finding that right balance between quality care and affordability, that's going to be crucial.
It's a tough balancing act for sure. And another challenge, I think, is staying ahead of the curve. When it comes to evolving needs and expectations, what might appeal to one generation of retirees might not resonate with the next.
You're absolutely right. Ashiana will need to stay very attuned to those changing preferences and expectations to make sure their communities remain relevant and attractive.
It's about constantly adapting and innovating to stay ahead of the game. Okay, let's take a step back for a minute And consider the broader outlook for the Indian real estate market. What are the key trends and factors that will shape the industry in the coming years?
Well, the Indian real estate market is expected to continue growing. That's fueled by urbanization, rising incomes, and a relatively young population. However, there are definitely some challenges on the horizon, including rising interest rates, inflation, and some regulatory uncertainties.
Okay, so a mixed bag of opportunities and challenges. What are some specific trends to watch out for?
One trend is definitely the increasing demand for affordable housing, especially in those urban areas. The government is pushing for affordable housing initiatives, which could create some really good opportunities for developers like Ashiana, who are already catering to the
So
segment
they're well positioned.
to benefit from those government policies. Absolutely. Another trend is the growing popularity of co-living and co-working spaces, especially among millennials and young professionals. So this shift towards shared living arrangements could open up some new avenues for those real estate developers.
It's about understanding and adapting to the changing lifestyles and preferences of younger generations.
Exactly. And technology will definitely continue to play a major role. Online property portals, virtual reality tours, other technological advancements, they're reshaping how people buy and sell homes.
It's the digital revolution happening right before our eyes, even in the real estate world. So how is Ashiana embracing these technological advancements?
Well, they'll need to continue investing in technology to enhance their marketing and sales processes, improve customer engagement, and streamline their operations. It's all about staying competitive in an increasingly digital world.
Now, circling back to Ashiana, something that really stands out to me is their long-term vision.
Absolutely. I think their commitment to building sustainable communities that cater to specific demographics, that's really commendable. Their focus on senior living, kid-centric homes, and premium homes shows a real deep understanding of the changing needs of Indian home buyers.
It's not just about constructing buildings, it's about creating lifestyles.
Precisely. They're not just chasing those quick profits, they're building communities that can thrive for generations to come.
It's a vision worth applauding, and it could very well be the key to their sustained success. However, it's important to acknowledge that no business operates in a vacuum. There are always external factors and potential risks that could impact their trajectory.
Absolutely. Regulatory uncertainties are a huge factor in the real estate industry. The sector is heavily regulated in India, and any unexpected policy changes could really throw a wrench in their plans.
So they can't just assume that everything will stay the same. They need to be prepared for those curveballs from the government.
Exactly. Things like changes to building codes, environmental regulations, tax policies, all of those could impact project costs and timelines, potentially affecting their profitability.
Right. They need to stay informed and agile
Yeah,
to navigate those complexities.
absolutely. They also need to be mindful of the cyclical nature of the real estate market. I mean, we've seen how economic downturns can impact demand and prices, which could have a real negative effect on their earnings.
So even with a solid strategy, they're not entirely immune to those ups and downs of the market.
That's true. However, their focus on those niche markets and their diverse portfolio could actually help them weather those storms, for instance. The demand for those senior living communities tends to be less affected by economic slowdowns compared to some other housing segments.
So they've spread their risk a bit
Yeah.
by not putting all their eggs in one basket.
Precisely. And their strong brand reputation and customer loyalty could also help them navigate those challenging times.
Okay, so they're not completely insulated from market volatility, but they do have some built-in safeguards. Now let's shift gears a bit and talk about a topic that's crucial for any company's long-term success. Innovation. In a world that's constantly changing, companies need to innovate to stay ahead. So how is Ashiana fostering innovation within their organization?
Well, they seem to have cultivated a culture that really embraces innovation, both in their products and their business processes. I think that kid-centric homes concept is a prime example of that innovative thinking. They identified a gap in the market, and they developed a product that fills it brilliantly.
So they're not afraid to challenge conventional wisdom and come up with some fresh ideas.
Exactly. And they're really leveraging technology to enhance their operations and the overall customer experience, for instance. They've integrated virtual reality tours into their sales process, allowing those potential buyers to really experience their future homes from the comfort of their own devices.
It's about embracing technology to create a more immersive and engaging experience
Yeah,
for their customers.
precisely. It's a smart move, and it really shows that they're keeping up with the times.
Now, while innovation is essential, it's not always easy to foster. especially in a large organization. So how is Ashiana actually creating an environment where innovation can flourish?
Well, they seem to have a pretty flat organizational structure that encourages open communication and collaboration. So this allows employees at all levels to contribute their ideas
Hmm.
and be a part of that innovation process.
Okay, so it's not just a top-down approach. They're tapping into the collective wisdom of their workforce.
Exactly. And they seem to have a culture that's comfortable with taking calculated risks. They're not afraid to experiment with new ideas, even if they don't always work out.
It's about creating that safe space for experimentation and learning from failures. That's often where the most innovative breakthroughs happen.
Absolutely. That willingness to take risks is crucial for driving real innovation.
Now let's touch on a topic that's becoming increasingly important for investors: environmental, social, and governance factors, ESG. So how is Ashiana addressing these ESG concerns in their operations?
ESG is definitely a big deal these days. Investors are increasingly scrutinizing companies, looking at their environmental impact, social responsibility, and governance practices. And Ashiana seems to be taking ESG pretty seriously. They've integrated several ESG initiatives into their operations, really demonstrating a commitment to sustainability and responsible business practices, for example. They've incorporated energy-efficient designs into their projects, reducing their carbon footprint and saving residents money on those utility bills.
So they're building green and saving green at the same time. It's a win-win. What other ESG initiatives are they implementing?
They've also implemented water conservation measures, like rainwater harvesting and wastewater treatment, really trying to minimize their impact on those precious water resources. And they're actively involved in social initiatives, particularly in the area of education, as evidenced by their support for schools in Rajasthan.
So they're not just focused on the bottom line. They're making a positive impact on the community.
Exactly. And I think their strong corporate governance practices, including a diverse board, and transparent financial reporting really reinforce those ESG credentials.
Okay, so it seems like they're taking a holistic approach
Hmm.
to sustainability and responsibility. Now let's bring it back to their financials.
Their financial track record is actually quite impressive. They've consistently grown their revenues and profits over the years, which really speaks to their ability to execute their strategy and navigate those market cycles.
So they're not a one-hit wonder. They have a solid track record.
Absolutely. Their strong sales, efficient cost management, and healthy cash flow have all contributed to their financial success.
They seem to be in a good place financially. But what about their future prospects? What will drive their growth in the years to come?
Well, their future growth really hinges on several factors. I think continued demand for housing in India is key, particularly in the segments that they're targeting: senior living, kid-centric homes, and premium homes.
Right, so they're riding the wave of a growing market.
Yeah,
But they'll also need to differentiate themselves to really stand out from the competition.
absolutely. Their ability to innovate, build a strong brand,
Mhm.
and stay laser-focused on the customer, all of that will be crucial.
It's about staying ahead of the game in a rapidly changing industry. And we've discussed their expansion plans, which are pretty ambitious. They're looking to develop new projects across a range of locations.
Yes, they're strategically expanding their footprint to tap into those new markets and
Okay.
capitalize on emerging opportunities.
But expansion can be risky, especially in real estate, where the investments are so significant. So how are they managing the risks associated with these expansion plans?
Well, they're taking a calculated approach. They're carefully selecting locations with high growth potential and conducting thorough market research before making any major commitments. They're also leveraging their existing expertise and resources to help ensure a smooth execution.
So they're not just randomly picking spots on a map. They have a well-thought-out plan.
Exactly. And they're diversifying their project portfolio,
Yeah.
spreading their risk across different market segments and those different geographical locations.
It's a smart strategy for minimizing risk and maximizing their chances of success. Now let's turn our attention to a critical but often overlooked aspect of any successful business: talent management. How is Ashiana attracting, developing, and retaining the skilled workforce they need to execute these ambitious plans?
Well, they seem to understand the importance of attracting and retaining top talent. They offer competitive compensation and benefits packages, and they provide those opportunities for professional development and career growth.
Okay, so they're not just offering jobs, they're offering fulfilling careers.
Exactly. They're also creating a positive and supportive work environment that really values those employee contributions and it encourages a sense of ownership.
It's about fostering a culture where people feel appreciated and motivated to do their best work.
Precisely. And this commitment to talent management is likely to pay off in the long run as they strive to maintain that competitive edge and achieve those ambitious goals.
Investing in their people is definitely a wise move. Now let's move on to a topic that's becoming increasingly important for companies in today's globalized world: risk management.
You're absolutely right. Risk management is essential for any business, but it's especially critical in real estate, which is inherently exposed to a wide range of risks. From economic fluctuations and regulatory changes to project delays and all sorts of unforeseen circumstances.
So they can't just cross their fingers and hope for the best. They need to proactively identify and mitigate those risks.
Precisely. And Ashiana seems to have a pretty solid risk management framework in place. They conduct regular risk assessments, identify potential threats, and develop strategies to address those threats.
So they're taking risk management seriously, which is reassuring. What are some of the specific risks they're facing, and how are they tackling them?
Well, one key risk is definitely the cyclical nature of the real estate market. As we discussed earlier, economic downturns can impact demand and prices, which could really squeeze their profit margins. So to mitigate this risk, they're diversifying their portfolio across different market segments and different geographical areas, spreading their exposure and reducing their vulnerability to fluctuations in any one area.
So they're not putting all their eggs in one basket.
Exactly. Another risk is project execution. Delays or cost overruns can really eat into their profitability and damage their reputation. So to address this, they have these really rigorous project management processes in place. They have experienced construction teams, and they keep a really close eye on costs and timelines.
Yeah, it's about having the right people and systems in place to make sure those projects are completed efficiently and effectively.
Absolutely. And they're also managing those financial risks very carefully, maintaining a healthy debt-to-equity ratio, making sure they have enough cash on hand, and protecting themselves against interest rate swings.
So they're not just rolling the dice. They're managing those risks strategically across all areas of their business. Now, let's talk about their corporate governance practices.
Their corporate governance framework is designed to ensure transparency, accountability, and ethical conduct. They have a diverse and independent board of directors that provides oversight and guidance, ensuring that the company is run responsibly and in the best interests of all stakeholders.
So they're running a tight ship, ethically and transparently.
Exactly. They also adhere to those really strict financial reporting standards and comply with all applicable laws and regulations, which further enhances their credibility and trustworthiness.
It's about building that reputation for integrity, which is really essential for long-term success.
Precisely. That reputation is invaluable. It helps attract investors, it helps retain talent, and it strengthens those relationships with customers and partners.
Okay, so their corporate governance practices seem to be in order. Now, let's zoom out a bit and consider the broader competitive landscape. The Indian real estate industry is a crowded marketplace, with lots of players vying for a piece of the pie. So how is Ashiana differentiating themselves from the competition?
Well, as we've touched on earlier, their focus on those niche markets, particularly senior living and kid-centric homes, that gives them a really distinct edge.
Yeah, it's about carving out that unique space for themselves, rather than trying to be everything to everyone.
Exactly. They've identified those specific customer segments, and they've really tailored their offerings to meet their very unique needs and desires. I think this targeted approach, combined with their strong brand reputation and customer-centric philosophy, really sets them apart in a very crowded marketplace.
So they're not just throwing darts at a board. They have a deliberate strategy. But competition is always fierce, especially in a dynamic market like India, where new players are constantly emerging. So how is Ashiana staying ahead of the curve?
Well, they're very aware of the competitive landscape, and they're taking those proactive steps to maintain their edge. They're constantly innovating, exploring new markets, and refining their products to meet those evolving customer needs.
So they're not resting on their laurels. They're adapting and evolving to stay ahead of the game.
Exactly. That ability to adapt is crucial for long-term success in any industry, especially one as dynamic as real estate. Now, let's delve into their marketing strategies. How are they getting the word out there and attracting buyers?
All right, let's explore how they're reaching their target audience and generating all that buzz.
Well, their marketing approach is multifaceted, combining traditional and digital channels to reach that wide audience. They participate in industry events, they advertise in print and online media, and they maintain a strong online presence. through their website and social media platforms.
Okay, so they're casting a wide net to capture those potential buyers. But are they tailoring their messaging to specific segments?
Absolutely. They segment their marketing efforts based on the target demographics for each project. For example, their campaigns for senior living communities really highlight those amenities and services that cater specifically to the needs of older adults. And their messaging for those kid-centric homes focuses on the family-friendly features and activities that appeal to young
It's
families.
all about speaking the language
Yeah.
of their target audience.
Exactly. They also leverage customer testimonials and success stories to build trust and credibility.
Yeah, it's always more powerful to hear from real people who have had those positive experiences. Now let's move on to their sales process.
Well, their sales process is designed to be very customer-centric and transparent. They have a team of really experienced sales professionals who guide those buyers through the entire process, from that initial inquiry to the final purchase.
So they're not just handing potential buyers a brochure and hoping for the best. They're providing personalized guidance and support throughout that entire journey.
Precisely. They offer those flexible payment options, and they really strive to make the buying experience as smooth and hassle-free as possible.
It's about building relationships and creating a positive experience. That fosters that trust and loyalty. Now, we've talked about their marketing and sales efforts, but what about their post-sales service?
They actually have a dedicated customer service team that handles any issues or concerns buyers might have after purchasing their homes. They also provide property management services, making sure their communities are well maintained and that residents' needs are met.
So they're not just abandoning buyers once the deal is done. They're providing that ongoing support and service.
Precisely. And I think this commitment to customer satisfaction is a key factor in those high referral rates and that excellent brand reputation.
Yeah, it's all about creating that loyal customer base that'll not only come back for more, but also spread the word to others. Now let's shift gears and talk about their financial strategy.
Their financial strategy is all about maintaining a healthy balance sheet, generating that consistent cash flow, and funding those growth ambitions in a really prudent manner. They primarily rely on their own profits and debt financing to fuel those expansion plans.
So they're using a combination of their own money and borrowed money, which is pretty standard for real estate
Like,
developers.
it is, however, it's really important to assess those debt levels and make sure they're manageable, especially in an environment where those interest rates are rising.
Right, too much debt can be risky.
Yeah.
So how are their debt levels looking?
Well, as of September 30, 2024, their consolidated debt-to-equity ratio was 0.35, which is considered to be pretty healthy, particularly for a real estate company.
Okay, so they're not drowning in debt. That's a good sign. But what about their ability to actually make money? Can they generate enough profits to justify their investments and pay back those debts?
Well, that's the key question, isn't it? While they did report a loss in Q2 of FY25, their past performance and their projections for the future indicate that they do have the potential to generate some really strong returns. For example, they achieved a net profit margin of 8.63% in FY24, which is pretty impressive. And if they hit their pre-sales target of Rs, 2,000 cores for FY25, well, that translates into some significant revenue growth.
So the potential is definitely there, but it's not a guarantee. They'll need to execute their plans effectively and navigate the market very carefully.
Speaking of the market, let's talk about those broader trends shaping the real estate industry. What factors are influencing Ashiana's strategy?
But one of the most significant trends is urbanization. More and more people are moving to cities, looking for better opportunities, which means the demand for housing, especially in those Tier 1 and Tier 2 cities, is constantly on the rise. And that's precisely where Ashiana is focusing their expansion efforts.
Right, so they're going where the growth is, aligning themselves with those demographic shifts and those market demands. Are there any other major trends at play? Another significant factor is the changing demographics of India. We have this growing middle class with more disposable income, and that translates into a greater demand for quality housing. And as the population ages, the demand for those senior living communities, well, that's on the rise as well.
It seems like Ashiana's focus on premium homes and senior living is really well aligned with those societal shifts. They're not just reacting to the market, they're anticipating those future needs.
Exactly. They're thinking ahead and positioning themselves to capitalize on those emerging trends. And of course, we can't forget about technology.
Yeah.
Online property portals, virtual tours, digital marketing. These are all game changers in how people search for and buy homes these days.
That's the digital age, even in real estate.
Yeah.
So how is Ashiana adapting to all this tech disruption? Are they embracing it? Or are they clinging to those old ways of doing things?
Well, from what I've seen, they seem to be pretty tech savvy. They've adopted a variety of those digital marketing strategies to broaden their reach and engage those potential buyers. Their website is really user-friendly, packed with information about their projects, and they're really active on social media, building their brand and connecting with customers online.
So they're not stuck in the dark ages,
Yeah.
which is always a good sign.
Mm.
Now, let's circle back to their financials for a moment. We talk about profitability, but how is their cash flow looking? Is the money actually coming in?
Their cash flow situation looks quite healthy, remember. They achieved a pre-tax operating cash flow of Rs 78.18 crores in Q2. Despite that net loss we talked about earlier, this positive cash flow is really driven by their strong sales performance and their efficient collection processes.
So the money is coming in. Even if it's not all reflected in their profits just yet, that's reassuring. But cash flow is just one piece of the financial puzzle. What about their balance sheet? What kind of story does their statement of assets and liabilities tell us?
Well, their balance sheet paints a picture of financial stability. As of September 30, 2024, their consolidated total assets were valued at Rs 298.74 crores, while their total liabilities came in at Rs 222.04 crores. So this tells us they have a very solid asset base, and their debt seems very manageable.
Okay, so their assets outweigh their liabilities, always a good sign. But what about the composition of those assets? What are their major assets, and how easily could they turn those assets into cash if they needed to?
Their biggest asset by far is their inventory of unsold units. It's valued at Rs 200.08 crores, and this represents a pretty big chunk of their assets, and it really reflects the scale of their ongoing construction activities. They also have substantial investments in subsidiaries and joint ventures, totaling Rs 10.24 crores, and of course they have Rs 13.57 crores in cash and cash equivalents, which are always the most liquid assets.
So they have a mix of assets, some that are harder to convert to cash quickly, like that inventory, and others that are much more liquid, like the cash and investments. This balance gives them the resources to fund their operations, while also having some financial flexibility. Now let's look at those liabilities. What are their major liabilities, and how are they handling them?
Their largest liability is actually advances from customers, totaling Rs 177.111 crores. This represents money they've received from buyers for homes that are still under construction. They also have borrowings of Rs 26.69 crores, mostly from banks and financial institutions, and they have lease liabilities of 574 lakhs.
Okay, so a big chunk of their liabilities is tied to their core business, selling homes. That's pretty typical for real estate developers. But how can we be sure that they can actually meet these financial obligations as they come due? That's always a concern with the real estate company.
Their strong sales performance and positive cash flow are key. These factors give them the financial resources to service their debts and repay those customer advances as they complete their projects. They're also pretty strategic about managing the timing of their debt repayments to avoid any of those cash crunches.
So they're not just piling on debt and hoping for the best. They have a plan. Now, after all this deep diving, are there any red flags or any areas of concern that you've noticed? Anything that makes you go, this is something to watch carefully?
Well, while Ashiana Housing has a lot going for it, there are a few points to consider. One is their concentration in a limited number of geographical markets. They currently operate in 8 locations, which means their fortunes are somewhat tied to the performance of those specific markets.
So if one of those markets takes a hit, it could have a bigger impact on Ashiana than if they were more spread out geographically.
Exactly. Another thing to consider is that their focus on those niche markets, while a strength in many ways, could also be a limiting factor. Senior living and kid-centric homes, while growing segments, are still niche markets within the larger housing market. So if they don't diversify effectively, their growth potential could be limited.
It's like a double-edged sword. It sets them apart.
Right.
But it also limits their expansion
Right.
within those very specific segments.
Yeah.
Any other potential concerns?
The final thing I keep an eye on is their ability to manage those rising construction costs, especially in an environment where inflation could become a bigger factor. They'll need to very carefully control their expenses and may have to adjust their pricing strategies to maintain those healthy profit margins.
That's a challenge for every real estate company.
Yeah.
All right, with those potential risks in mind, let's step back and look at the big picture. What's the overall story that emerges from this deep dive into Ashiana Housing?
I think the key takeaway here is cautious optimism. Despite reporting that quarterly loss, They're showing signs of real strength in their operations. There's genuine demand for their products. And they have a very clear vision for the future. Their expansion plans, their focus on those niche markets, their commitment to customer satisfaction, these are all factors that position them well for growth over the long term. But of course, they'll need to navigate those inevitable challenges: market fluctuations, rising costs, competition, to fully realize their potential.
It's a fascinating story, and it reminds us that sometimes looking beyond the headlines is crucial for getting the full picture. Ashiana Housing's journey shows us that true understanding requires a deep dive, exploring not just the what, but also the why and the how.
Absolutely. It encourages us to think critically, consider different perspectives, and form our own conclusions based on the evidence.
And on that note, we'll leave you with a final thought to ponder. Ashiana Housing's success will depend on their ability to anticipate and adapt to the changing needs and desires of Indian homebuyers. So what trends do you see shaping the future of housing in India? What factors will drive demand, influence design, and redefine what home really means? We encourage you to keep exploring these questions, using the knowledge you've gained from this deep dive as a starting point. Until next time, keep learning, keep questioning, and keep diving deep.
And remember, the world of real estate is constantly evolving, so stay informed, stay curious, and keep those insightful questions coming.